Good Friday morning. I'm Yahoo Finance Executive Editor Brian Sozzi, and this is Opening Bid. Psyched for my chat shortly with Baiju Bhatt. Baiju is the co-founder of Robinhood, but he has been spending this year scaling up a new satellite venture. He tells me his young company is about to have a milestone moment. This chat is moments away. Here's what's on my mind right now, though. Like Oracle earlier in the week, Broadcom shares are getting cooked after earnings. The reason for the sell-off is also similar to Oracle. Investors wanted way more juice on the AI front from this super high-tech company. Broadcom CEO Hock Tan struck a bullish note on a new $11 billion order from Anthropic and touted $73 billion in backlog. The market says it could really care less. Lululemon is giving a pink slip to its fumbling CEO Calvin McDonald at long last. I went to a long rant on this one over my Instagram account this morning. I encourage you to give this one a watch. It's only 5 minutes. It's truly unfiltered. I will simply say this here. Lululemon's board should have canned McDonald 2 years ago. And lastly, we are days away from Yahoo Finance revealing its annual Company of the Year award winner. Love this one. I can report this to you. We have whittled the potential winners down to two, OpenAI and NVIDIA. So they are both battling for that crown, which everyone wants. Here on the Opening Bid Roundtable, Ben Emons, FedWatch Advisors Chief Investment Officer and Founder, alongside Yahoo Finance Senior Reporters Brooke DiPalma and Ines Ferré. Good to see you all. Brooke, I was going to start on AI, but I'm just jazzed up by this Lululemon story and this shift at the top. It should have happened a while ago, Brooke. The results weren't good.
Brian, you're not the only one amped up because investors are amped up too about this C-suite change at Lululemon. Right now, shares are up about 9% in pre-market trading. Now even more, up 13.5% as we make our way at the open into today's trading session. And what we really know is that this was expected, although you say it should have happened already sooner. Keep in mind, 2 years ago, Lululemon was at the time still performing fairly well, maybe post-pandemic, losing some of that demand that it had run up to see. But right now, this is clearly a catalyst for the company as they really try to figure out how to get into the conversation when it comes to new innovation, new products in the right way that consumers are looking for. And I've been reading up different notes this morning, but I think this really speaks to some of the mentions, some of the CEOs that you had mentioned on that Instagram video of who you think the next pick might be. And Anisha Sherman at Bernstein saying that this new executive needs to have experience within growth and transformation. And I think that some of the executives you pointed out have done that before.
This could be a pretty great gig, Ines, for someone out there experienced in retail. I mean, Lululemon is not a dying brand. They're not going away. They just need somebody to get atop this company that has a clue.
Yeah, look, I saw some commentary out there that this is clear slate sort of strategy that Lululemon is taking on here. I was wondering what exactly had gone wrong. I mean, I know that you go to Lululemon a lot, but look, during the pandemic.
Yeah, well, hold on, Inez, I'll tell you what went wrong. I've been going to Lululemon for the past 2 years and coming out completely empty-handed. I mean, the fits aren't what they used to be. They put logos on the clothes. I don't want any of it. And it's just too expensive, Inez. Go ahead, sorry.
Well, look, I mean, that's exactly what Jefferies analysts earlier this year had talked about. Logos everywhere, that they're trying to be everything to everybody, that they've strayed away from their yoga pants and putting out sort of generic designs, that sort of being more like the Gap. So that may be what has gone wrong with this stock, with this company, because it definitely was on fire while people were sitting at home during the pandemic, and then it went down. And look, if you look at the trajectory of where the stock was during McDonald's helm, you're seeing that he entered in 2018 to now. It's up about 40%. Meanwhile, the S&P 500 during that time up 142%. So perhaps this is why he's exiting the company. And yes, a clean slate now for the company. But it'll be a high bar because it's a very, very competitive industry.
Ben, I feel bad. We usually bring you on here to talk about the Federal Reserve. And yeah, we did have a Fed meeting this week. But look, we did get that rate cut. And I'm going to try to tie this all together. In light of that rate cut, is it the fertile backdrop for growth stocks? And Lululemon is still valued as a growth stock. And I know the results have not been growthy, but after this rate cut, is that the way to go?
It may be, Brian, the way the market will trade this is that you get examples like this, Lululemon, you get changes there. And as you get rate cuts and liquidity injected in the system again, it starts actually today. Yeah, you're right about this fertile background, meaning like you're getting risk attitudes back into the game, and they'll pick stocks like this and say, "Hey, new management, new clothes, new Lululemoners. I'm going to be all in." So I do think this is the case, as it will be for some other beaten down stocks. So it seems that we're going to go back into risk taking environment.
Brooke, real quick on Lululemon, it's an interesting time because we essentially will now have next year turnaround stories at still Nike, Lululemon, and a lot of other retailers, I would argue.
This is definitely a moment in time where these retailers are taking a step back and trying to figure out how they're going to cater to this entirely new generation of consumers where convenience matters. They want authenticity. They want to be sure, especially those younger consumers, they want to be sure that they really know and understand the brand's mission. And I think that given Lululemon just trying so hard after the surge of that belt bag, as Ines pointed out, putting logos everywhere and trying to see if the green leggings work, I feel like they really have lost that touch that the younger consumer is especially looking for. We know that Nike is still trying to figure that out right now. Starbucks, another one that's still trying to figure it out right now, and even Target. And all of these companies have had different CEOs step into these roles as they make their way into the next generation. And so clearly this is a moment in time in retail where there's new executives at the helm to figure out how they're going to cater to a customer who wants convenience, is using AI, and has a bit of a different taste than maybe a few years ago.
Yeah, I will just say on this, I'm surprised Calvin was even allowed on this earnings call. That does not happen when you announce a CEO change. The CEO gets to deliver their earnings report on the earnings call. But let's switch gears. Ben, I want to go back to you because we're still watching Broadcom, watching Oracle from earlier in the week. What's the takeaway here? The market, both these quarters were very good. They just weren't good enough. What's the read through to the broader tech scene in your view?
I think it comes down to, Brian, that the expectations for AI are so hyped up that you cannot even match expectations anymore with these blockbuster earnings that Broadcom yesterday had. Their semiconductor revenues were up, I believe, 74% year on year, and yet the stock sells off on that it isn't good enough, so to speak. And that makes you wonder, are we hitting here the peak in AI optimism and sentiment? Because what is it going to take to really beat those expectations? And as we talk about Lululemon too, as another example, there's more and more price competition coming back in the marketplace. And that's the same thing for the AI players. Why, for example, another stock like NVIDIA, it's kind of lost luster because it's showing now that competition can catch up with a company like that as well. So I think for the broader space, it means that if there's more competition about AI, as we're getting more and more adoption, it's going to get more challenging for those who were in the leadership role there. And that's why some of these stocks like Oracle and Broadcom get punished. But ultimately, I do think that investors come back to stocks like that because these companies are generating a lot of free cash flow and value.
And as I mentioned at the top, we have two AI companies really at the heart of things as our finalists for our Company of the Year award. We're dropping that on Monday, 7:30 a.m. We have NVIDIA. We have OpenAI. And you could really make the case, Ines, either one of these companies can win.
Yeah, either one of them are definitely at the forefront of AI. I would say that, you had sort of polled us previously about this, and I think that your two choices or two runner-ups are excellent, either of them. I would say NVIDIA would be the one that I would choose, but we'll have to wait and see until Monday, I guess, just because it's the poster child of AI. It has been the leader for the chip space that has outperformed this year. And the leadership there, Jensen Huang has been a CEO and a diplomat. Being able to also open the door for its chips in China, I think is great for the entire industry as a whole. So they're holding the baton in my view.
Brooke, who do you think is going to take this crown?
To play devil's advocate to what Ines had said, I feel like you can't have a conversation around AI without mentioning OpenAI. We saw them team up with Disney this week. We also saw them team up. I did a story interviewing a Target executive about how they're now being able to shop inside ChatGPT for consumers. Also, Walmart teaming up with OpenAI. That is the company that everyone is scrambling over to be sure that they announce some sort of partnership with them as they really kind of pave the path for what exactly this use of AI among consumers really really seems to be. Of course, they just had that code red where they're really trying to double down to make sure that ChatGPT, the use case doesn't get lost to Google Gemini. And so it looks like they're trying to stay ahead. And also, when you think about it, this company that sort of has been ramping up as of late and now is rumored to have a $500 billion valuation and could be going public next year. So it's a competitive race there, Brian.
Ben, who's, in your view, who's the most important company to the AI trade next year? Is it NVIDIA or OpenAI?
I would still lean on NVIDIA, Brian, because one, it is a company that's really established in the race, and it has ultimately the dominance on those powerful chips. And although they made them somehow their way into China too, it goes to show how much people want those chips. Because OpenAI is about really let's say, the large language model infrastructure that, although they will allow for more generation of different models, those models don't exist without the chips, without the hardware. So that's why I think NVIDIA stays ahead of it. Now, it's hyped up, obviously, OpenAI, but there's also a lot of criticism on the company of like, is this really a technology that's going to harm the economy, say employment? And you can tell from the executive order from President Trump today, like they want a federally controlled AI laws, and those are coming into place. So for OpenAI, that will be potentially a challenge because the hardware is really what people ultimately want. So I think NVIDIA stays the key company. Yeah.
Ben, thank you for being a good sport on this Lululemon chat. Sorry to bring you into my smoke. Brooke and Ines, I'm not sorry. This is what we do. We bring analysis here. Thank you so much. Coming up, my man Baiju Bhatt returns, and he is coming in hot with details on something called galactic brain. We'll be right back. If you think all this chatter of building data centers in space is BS, think again. A lot of very smart people are putting big money in play to pull this one off. Those names reportedly include Elon Musk, Jeff Bezos, and the folks over at Google. Why? Because we need all the power we can get to support America's AI infrastructure build out. One of those smart people is Baiju Bhatt, Aetherflux founder and CEO, and Robinhood co-founder. Baiju joins me for my Power Player segment. Baiju, always nice to see you. Thanks for doing this today. Talk to me about galactic brain. What is it?
Yeah, first of all, thanks for having me on. Excited to announce this week we're announcing what we call Galactic Brain, which is our first satellite that's going to perform artificial intelligence compute in space. We're targeting a launch of Q1 of 27. And this is built on top of the thesis that I started the company with, which is that power in space is this unique environment where you have access to sunlight nearly continuously, and you can fly electronics applications there and actually have access to truly abundant power. And so we've been working for the last year and a half on a slightly different project that's going to beam power down to the ground in contested environments. And this is a new initiative that we're announcing that actually brings the chips right next to the sunlight. And there's been a lot of chatter on it of late too. So it's cool to see that the excitement for energy in space is really heating up.
I imagine, Baiju, you don't put out a release like this if you don't have something like serious, like you're getting ready to rock and roll here. What have you been up to the past 3 or 4 months to arrive to this point? Like, what are you working on in terms of building out the team and even in terms of logistics?
Yeah, so we've got a growing team of 35, 40 people, as the company's only about a year and a half old. We've been really working hard on our main mission, which is, like I mentioned a second ago, beaming power down to contested environments, energy that we collect in space. But we're starting to branch off into also targeting the second application for the core idea, which we think of as a power grid in space. So, a lot of startup building is, usual stuff. So you hire people, grow the engineering team. We've been receiving a lot of the hardware that's going to integrate into our first satellite. And so just a reminder, we have 2 satellites that we're targeting for launch next year. The first one sort of in the finishing touches that we're putting on it with assembly that goes up in June. So we'll ideally have a series of launches that sort of build this constellation in orbit, serving these 2 different applications.
The hardware that you need for these satellites, Baiju, where does it come from? Are we building things like that in the U.S.?
We are. We need to rapidly ramp up the manufacturing capability, though, because one of the core ideas here, and the reason why I think this is such a strategic imperative for the United States, is because if you look at the broader landscape right now, the United States has a definitive advantage in access to space. Like we do more launches than the Chinese and every other country. And that looks like it's going to continue to be a place of dominance for the United States. On the other hand, when you look at energy infrastructure and build out and the number of gigawatts that the United States versus China is bringing online, paints a very different story. China's way ahead of us on energy, and the race for AGI and all these powerful AI applications, I fundamentally believe is a race for energy. So what this access to space for energy represents for the domestic strategy is it actually lets us as a country translate our advantage in access to space to an advantage of access to power. And I think that's going to be super critical. I think this is going to be one of the emerging areas for commercial activity in space, which even last time we talked about was a major focus area of mine. I think we're going to see space become a much bigger part of day-to-day life on planet Earth when we find more commercial applications for it. And energy looks like it's going to be one of the big ones.
Not a day goes by, Baiju, where I'm not hearing some AI company striking a deal to open up a data center that will open up in a few years. I mean, as someone that is in the trenches on the grid and really trying to figure out like what is going on with this AI infrastructure build out, like, are we hitting some type of like moment where the grid is just gonna, I mean, I don't know, explode? Like, I don't know any other way to put it.
Yeah, it's the story that we keep hearing over and over again is people don't want these AI data center build-outs in their backyards. And for good reason, because it taps into the same energy grid that the rest of us are using to live our lives on. And it has huge environmental impacts because a lot of these data centers use a ton of water. And so there's a bunch of different ways that this can go. There's a lot of people out there right now that are engaging in construction projects to dig huge ditches into the ground and build data centers, right? And then run power lines to those data centers and bring utility to those data centers. The problem is that's a gating factor for advancing this technology. And you're basically ending up in a situation where you're gating technological progress on your ability to do construction projects. And so what this other path towards powering AI represents is a way to say, hey, if you've got the chips and you've got access to the actual silicon that's doing the processing, there's a much more straightforward path to actually build solar arrays that directly power those chips, build the cooling solutions when those chips generate heat, and package that into a satellite, which is basically something that pops off of an assembly line as we see it. Mm-hmm. So you translate the access to energy for AI problem from one of, digging in the ground and pouring concrete to building satellites that as soon as you have them in space, they're going to be illuminated, they're going to be operating, and they're going to operate until end of life.
You mentioned a couple tests next year, Baiju. What exactly will you be debuting and testing that we might see?
Yeah, so around the summertime should be exciting. We'd love to have you out for when we do this. We're actually going to demonstrate a first ever beaming of power from space to Earth. So this is the other application that we're working on in Aetherflux. And what that does is it'll collect power in orbit and then use an infrared laser to transmit that power down to the ground. And the reason this is useful is because it's an energy source in places like contested environments where our military operates, where there's no access to power outside of something like this or using diesel generators and actually transporting fuel into the battlefield. So it'll be a first demonstration of this capability, and we hope to build this out into a constellation that gives our armed forces, our troops in the battlefield, a backup power supply, an alternative way to generate power. And it should be pretty spectacular to bring to life because this isn't a part of day-to-day life on Earth right now.
No, that's for sure. Last time we talked, I think you had raised like $50 million, but I'm just hearing you, like I'm just listening to you and I hear like you're about to make that next move, the next chapter in your new company is about to open. People about have to be handing you checks. I mean, do you need more capital and how much do you need to like bring this vision to life?
Yeah, next step for us and what we're going to end up doing a lot of this year is going to be actually standing up manufacturing for the components that go into these satellites. Because we want to be ready to run in 27, 28, 29 as these heavy launch vehicles come online. You remember probably from the first time we talked, that was one of the core ideas behind this. So to answer your question, yeah, we're going to certainly need more capital as we grow the company, but we're feeling pretty comfortable where we are right now. We've got our couple of missions that are going live, well on their way. We hope to have some really cool stuff to show the rest of the world, and on more funding, stay tuned.
All right, fair enough. Lastly, Baiju, it's not often you get a founder that launched a successful business, in this case, Robinhood, do a second act, which could have a lot of success. Just sitting here listening to you discuss where you are right now in the business. I mean, what did you learn in those early days at Robinhood that you're applying here to your current company?
Yeah, it's kind of interesting because the early days of Robinhood, the really fun parts were discovering product market fit and how do you build something that a lot of people want to integrate into their day-to-day lives. Once the company got, up to scale, we were a real player in online brokerage and access to the stock market, and it was competitive, and it continues to be competitive. I gotta say that's relevant experience today, because when we look at the other folks that are trying to make this concept happen, it's going to be big players like Elon Musk, Google, SpaceX. Jeff Bezos has talked about this. So there's an arms race for getting AI in space, and it's going to be competitive, and we're excited about that.
Well, I'm looking forward to following your continued progress. Baiju, good to see you. Happy holidays. We'll talk to you soon.
Thanks so much. Thanks for having me on.
Appreciate it. All right, like I mentioned at the top of the show, Monday, we will be unveiling our Yahoo Finance Company of the Year Award. I will have an exclusive interview with a top executive at the winning company. That will be dropping at 7:30 a.m. You will also find 3 feature stories on Yahoo Finance that dive into the winner's future. Again, the 2 finalists are OpenAI and NVIDIA. Who do you think should win and why? Hit me up on X at Brian Sozzi, and be sure to copy in Yahoo Finance. We'll be right back.